Welcome back to Colorado and Company. There's so much focus on financial topics lately, specifically retirement, the horrific bear market that we're experiencing, and where you can turn locally to help gain some education and information about how to make your retirement better.
We have with us two independent advisors with the Retirement Education Institute, a local organization with the mission of putting retirement strategies to work for people. Patrick Jolliffe is a certified financial planner, practitioner, and chartered financial consultant, as well as the founder and president of Jolliffe Capital, Inc., a registered investment advisory firm registered with the Securities and Exchange Commission.
Along with Pat is Sean Mercer, president of Mercer Financial Group, a local firm specializing in retirement distribution strategies geared toward principal protection, predictability income, and minimizing income tax. Welcome to the show,
Welcome,
gentlemen.
guys.
Thank you.
Good to see you.
Thank you.
Pat, let's start with you because, as we said, in light of the recent market, the big downturn, what do you think is the most critical issue for people out there right now regarding their present financial condition?
I think it's most important for people right now to get a personal benchmark calculated, which is essentially the rate of return that they need to earn on their portfolio to help them sustain through retirement. Traditionally, I think people have a tendency to compare their portfolio return just to broad market indexes like the S&P or the Dow and so forth. And that's useful information, but it doesn't really tie back into specifically what they need to earn to support their lifestyle expenses through retirement. So that would be number one, is calculation of a personal benchmark. And then also work with a certified financial planner practitioner or someone that's held to a fiduciary standard, which means that in that case the client's interests are to be placed first. And that's what we do at the Retirement Education Institute, and those would be the most important things to start with.
Great. All right, Sean, as the founder, tell us a little bit about what a person can expect when working with the Retirement Education Institute. What do they get?
Well, what Pat and I, when we came together, what we wanted to bring to the table was something different and get professionals in their individual fields to work together to make sure that there is no stone left unturned, because there's what we've experienced is kind of a disconjointedness with advisors. A person may get one recommendation from a broker, they may get another recommendation from their attorney, they may get a separate recommendation from their insurance provider.
A lot of conflicting info.
And then all of a sudden, people are confused. And it's very, very important, because people of this generation are not really retiring with pensions per se anymore. They're retiring with a 401k.
Yeah.
And so that bulk of that money has to perform and wear all these different hats. So you need to make sure that all your advisors are working together for the common goal, which is sustaining you through your retirement years. And we've brought all of those people together under one heading. We know what every advisor is doing, and we're working together to be able to provide that service.
Very
Okay,
cool.
well, let's talk about the current retirement folks. I mean, how do they bounce back from a market like this?
There's really kind of a threefold answer to that question. We've obviously seen a downturn, so people with their equity positions need to make sure that they're properly positioned for the bounce back, because when that bounce back occurs, in a 12-month period, statistics have shown that when the market turns to a bull market, almost 60% of the return is given to them within the first 12 months. So people need to make sure that their equity positions are properly positioned for that bounce back.
All right.
Secondly, if somebody is in retirement and they're wanting to make sure that they're not going to lose any money, there are some of the largest financial institutions out there that are providing guaranteed and principally protected vehicles that can provide sign-up bonuses between 5 to 15%.
Goodness.
And they can utilize that with safety of principal and income and various different strategies.
Very nice.
And then the third part of that is, which every viewer can do, is make sure that they are mitigating their taxes along the way, because the only way to really build wealth in this country is to keep the IRS out of your pocket.
Yeah, and let's get back to you, Pat. I mean, you know, I know like my stepmom and my mother are both retired, and they've seen, boom, a big drop.
Yeah.
That's right.
What do you think? What's the number one concern you get from people these days, considering all the craziness going on.
I think it's exactly that. I think people are concerned about outliving their retirement income, number one. People were waking up January 1, say with $500,000 as an example, and yesterday they wake up and maybe they have $300,000. So how does that affect the retirement account? Certainly it's a function of what's happened in the markets, but it's also a function of, because of the global economic situation that we're in, we have the new President-elect Obama that's coming in. They have challenges in front of them, certainly. And you have to look at, is the economy itself really going to be able to grow us back out of this? And that's questionable, I think. I think we're going to have to look at the possibility of an increased tax rate across the board. Sean brought it up before. 401ks and IRAs, there's probably anywhere from $16 to $17 trillion in those accounts right now. And when you take those distributions out, of course, they're going to be taxed at the highest tax rate of the recipient, each recipient. So there's tax planning that needs to be taken into account. People are living longer. So life expectancies are going up. That puts a lot more pressure on the portfolio. We're having advances in medicine that aren't necessarily curing us. Okay, but it's
us alive longer.
Exactly. So all of those things need to be taken into consideration, and naturally people are concerned about it.
Okay, well, with this crazy time right now, how do we allocate our portfolio? What would you suggest?
Well, one of the things that we see, first of all, it's not so much a function of allocation as it is people walk in and they have all of their assets in one bucket. They have their savings, their cash, their insurance, equities, and so forth is all together in one bucket. Now, all of those things are supposed to do something different for your financial plan. So what we like to do is, instead of have it all in one bucket, separate out several buckets and give them specific disciplines. To say, bucket number 1 is to provide us the savings. Bucket number 2 might be providing income for years 3 to 5. Bucket number 3, years 7 to 10, and so forth. And then when you get out to the longer term bucket, the thing that people have to remember is the way to mitigate the risk in the market is with time. So if you have time, break out those equity assets, place them into a longer term position, and then use that time to help you mitigate the risk that's there. But this way people they don't react quite so negatively when they see the market react like it has recently. They can understand that the first 3 or 4 buckets that they have are safe, they're guaranteed, they're providing good income, and we can let the other equity style continue to be invested and work for them over time.
What's most important with that, just to kind of jump in, and a point that needs to be brought up, is the concern that people have is when you're spending income out of an asset that is decreasing in value. And so what we do is we will, during these turbulent times, is make sure that your income that's coming out, that you're needing to sustain yourself, is not coming out of a bucket that is losing money.
We'll give our viewers more information on how to contact you. That's really important.
Thanks, guys. All right. With the right strategy and the right professional guidance, your retirement years can still be secure and financially sound. Your investments can also be protected with the right direction. Join an upcoming workshop with the Retirement Education Institute in your area.
Visit their website at happynestegg.com and click on workshops for a seminar near you. Now, there are several this month alone from Denver to Fort Collins, and they're free. You can register right online, and if you have additional questions, please call this number, 303-320-1460, 303-320-1460. The first 50 callers who mention the show today will receive a complimentary atlas just for calling. Jolliffe Capital, Inc. paid for this segment.